Let's now look at what is the importance of the concept of residence in international taxation. The first and the most important part is that residence concept helps in determination of whether or not a particular person is covered within the scope of a given treaty. So, like I discussed briefly in the preceding slide, the benefit of a tax treaty is available only to people who are resident of either one or both the contracting state. So let's say if country X and country Y have entered into a treaty, the benefit of a treaty between them can be obtained by a person who's either a resident of country X, or he's a resident of country Y, or he's a resident of both the countries. The second thing is that the concept of residence helps resolving cases where double taxation arises. Now, think of a case where there is an individual and he has been living in country X. He has his home in country X, and at the home, his wife, his children, and his parent, everyone stays. Now, due to work, the individual has to go to country Y. And he stays here for, let's say, 200 days during a given tax year. Now, country Y basically says that if a person is more than, let's say, 183 days in their jurisdiction, he will become a resident of country Y. Whereas at the same time, country X says that if a person has a home, a permanent home, and his economic and relationship are more in the country, he'll become a resident of country X, then he may become a resident here as well. So we have a situation where an individual can become a resident of country X and country Y. These are the cases which are referred to as double taxation cases, particularly within that, a dual residence case. So the example that I gave is of the dual residence case. So the X is actually, this individual is actually a resident of country X as well as country Y. So there's a case of dual residence. Now, how do you resolve this is something which is dealt with in Article 4. The other case could be that an income earned by a particular individual may be taxed twice. So once in the source state, that is the state where the income arises, and second in the state of residence. In such cases also, how should you avoid double taxation is something which can be resolved with the help of Article 4, which is residence in international tax treaties.